We start today's market talk. Nobody can predict interest rates, the future direction of the economy, or the stock market. Dismiss all such forecasts and concentrate on what's actually happening to the companies in which you have invested. So it's more important to know the business you own. Behind every stock is a business, and in the long run, stock prices follow earnings. And if history is any good indicator, there will always be something to worry about. Something will always be going wrong in the world. We need to maintain equanimity during the periodic booms and busts. And this is the difference between investing and speculating. Market outlook. If you see very clearly, the fiscal tilt of the government has been on infrastructure development as the spending has grown three times between FY20 and FY24 to around 10 lakh crore. Now, infrastructure shows promise to create wealth for the investors. We are seeing it in the last few days also. All the infrastructure related stocks are doing well. Capex is to GDP ratio is expected to reach a 9-year high of 3% in FY24. This fiscal, you are going to see around 14,000 kilometers of highways being added, 1,600 kilometers of rail freight corridors being commissioned, around 1,000 kilometer which is already constructed of this rail freight corridors, 50 odd airports, heliports, waterdromes, advanced landing grounds being activated, reactivated uh, to improve the regional air connectivity. In terms of energy, 450 gigawatt of renewable energy is being done by 2030. So there will be a lot of ancillary requirements because of that. Ports, airports, transportation network, they will all boost the trade and economic ties. And this is what is will be the key driver of the economy. Now, the another interesting thing is expect turnaround in policy rates across the world and India, which makes bonds a more rewarding investment today. Now, there is a big demand from foreign investors as central government bonds get included in the global bond indices. In FY25, the combined central government and state government borrowing is expected to be lower, while demand is expected to increase. So this setting is perfect for bond yields to ease. With possibility of a rate cut in second half, investors should be looking to grab bonds. Now, more about these bonds, it's very interesting. In 1987, we saw a movie called Wall Street, where Michael Douglas was there. He said, "Greed is good, and lunch is for wimps." So, it brought in kind of a urgency in traders. Everybody wanted to trade, but every trader who tried to emulate Gordon Gekko, uh, you know, didn't go anywhere. And in the sequel of the same movie, Wall Street, Douglas said that make haste but slowly, because he was now a ex jailbird, older and wiser. So after you have seen one or two cycles of boom and bust, you understand the virtue of patience and capital preservation. With government bonds, you are assured of return of and on capital. And your capital is your freedom to trade oblique invest, because in cycles when it goes down, then you don't have cash to come back. So it looked good when Harshad Mehta said in that movie, risk hai to ishq hai. But it gave you a feeling of adrenaline rush. But remember, both Gordon Gekko and Harshad Mehta went to the jail. So invest some portion of your capital in bonds also, and this is the best opportunity. The other point is the exponential increase in mobile data usage and the push toward digital data with industry is also adopting digitalization is translating into demand for data centers. Now, expenditure and investments of about rupees 37,600 crores is expected between next 3 years in data centers. Investment would be concentrated in large cities basically because there is better electricity availability and better data connectivity, etc. There is higher data usage at individual and industry level, and the policy of data localization of the government is what is fueling the data center boom across the country. So just watch out for this issue also. Now there is big emphasis on localization of electronic manufacturing and import substitution, basically for defense. It presents a decent opportunity for domestic companies like BEL. They are expected to do around 15% revenue growth this year, and they have a robust pipeline of defense projects, expansion of non-defense sectors, and export market. The caution here is that FY25 EPS is expected to be around rupees 5.3, and stock is already at 38 times FY25 earning also. Hence, one has to be cautious in terms of valuation. Though one important point to note here is that the fourth quarter is the best quarter always for all these defense companies. Revenue of they're going to do a revenue of around 20,000 crore in FY24, and they have an order book of roughly 76,000 crore at present. So there is a revenue visibility for the next 3 to 4 years. Now, the other issue is there is a decadal investment opportunity in energy and power sectors. There is a rising demand for electricity, which is driving the need for thermal capacity addition. So expect 24,000 to 35,000 megawatt of fresh thermal orders over the next 4 to 5 years. And execution is a duopoly. It is between BHEL and L&T. Other than that, NTPC, BHEL, Adani Power, Coal India, Niveli Lignite have all sizable capacity addition for electricity lined up. The other beneficiary of this would be the Coal India. Production at Coal India, the larger producer of coal, rose by 10.5% in the 11 months up to February 24. So coal power plants have full inventories equivalent to 17 days of consumption versus 12 days in the year ago period, where they were rushing trains to provide the coal and all. So there is more production from Coal India. Utilization levels at coal power plants rose to the highest levels in 10 years in FY24, and this trend is going to continue for some time now. So all these coal producers are also going to benefit. Now the concern was that the residential air conditioning business for most EMS players is going to be under pressure. The reason is, firstly, there is competition is intensifying as OEMs have started in-house manufacturing, posing a challenge to the EMS contract manufacturers. Now, RAC segment revenues of both Amber and PG Electroplast is expected to decline in FY24. Though PLI scheme has helped the industry, but but because of higher competition and all the companies like Voltas, Blue Star, etc., Daikin creating their own capacity and not depending on these EMS players, hence these stocks are under pressure. Uh, Local value addition for RACs have also increased. Earlier, we were importing most of the parts. So the local value addition earlier was around 25 to 30%, which has increased to 60 to 65% now. And EMS players like Amber, EPAC, PGL have also increased their capacity. Hence, there is likelihood of a P contraction in case of earnings disappointment. Hence, one has to be careful with all these stocks. And that is the reason why the EMS players of RAC are under pressure, which is reflected in the performance of their stocks. Now, talking about some technical aspects, this is US 10-year yield. It generally remained at the same level last week. This is because the US inflation has cooled while spending has kicked up. So Powell said that central bank is in no rush to cut interest rate. So this to and fro movement on interest rate is coming. So right now it is in a state of static state where it is not moving any direction as on date till the time there is a clarity on this issue. News flow will be critical input. Quarterly results are about 2 weeks away, so we'll have to see it that way. Uh, and dollar index similarly, though it is in a declining trend line, but it broke above the declining trend line last week, and that was a concern last week. But then it had a kind of a flat session where it was reddish candle, which is indecisive, which was made. Uh, there was a big fear that dollar strength might lead to Nifty weakness, but it got over as the rupee stabilized during the week to around 83.3 odd levels. So that is not a big deal. Brent crude also has broken above this declining trend line and has reached around 86 to 87 level, basically due to supply constraints and ongoing geopolitical conflicts. Gold has broken out. This is related to the interest rates issue and possible rate cuts. So it has and higher demand from countries like China. So it has now breached that 2200 level decisively and is headed higher. So let's see to what level it goes. Nasdaq had a positive week, basically because the news is not really confirmed which direction it is going, and there are good earnings also. India's 10-year yield declined. If you see, it was negative and red candle below the 100 EMA now. And this was because when the government has given their borrowing program, it indicates that the next 6 months they are going to borrow substantially lesser than last year. Hence the bond yields declined. This is what I was referring to initially, that there is going to be more demand and lesser supply. Hence, the rates will fall. India VIX uh, had a general normal session, nothing great about it. It was in a range bound, still below the 20 and 50 EMA, so not to be worried as on date. And it is not spiking up now because expectations are of a political stability now. So uh, it will become unstable or it spikes up if there is instability in the for the future. Nifty 50, so it had a positive week. From the lows it had made, it bounced back, and on Friday, uh, the it nearly went to an all-time high. The expectations of future or further declines were negated in the truncated week. So if you see here, uh, in the last week, there was a gap down on Tuesday, mild rally and profit booking, and mild rally and profit booking on Thursday. Recovery could be due to strength in the US markets and other issues, and end of the year, some kind of NAV propping up and other issues. So we'll have to see. But if you see here, the Nifty is clearly above the 50 EMA, hence it is strong until the time it remains above this 21,890 odd levels. It will remain in a bull market, and there is not an issue. And the low of 21,720, which it made in the last week, is the one to be watched. But higher levels are always possible right now, which it was pointing out last week. This is the hourly chart. So if you see here, this is how last week panned out. There was a gap down here, then a flat session, and then it recovered and went up. And there was some last hour selling on 28th. So it ended flat at around 22,300 odd levels. So this is the one which has to be kept in mind. So right now one has to concentrate on stocks where the earnings and all are expected to be good. This is the option chain. This is what I referred to last time. So I'll just give an update on the on the straddle, in case last week you had bought a saddle at 22,000 Nifty. That last week the price was the total premium was 700 rupees. Now, after the movement of 350 points on the Nifty, the premium is still 735 rupees. So you have only lost 35 rupees despite there is a movement of 350 rupees. So it's relatively secure, and once it corrects, again the premium will go down. So this is the kind of uh, trades one can take in these levels if the index levels are protected for future. Reliance, it's above the trend line, and till the time it's above this 2850 level, it is strong. It made a journey to 3,000 and then turned back from there. But it is looking strong, and this is one which is giving strength to the market. And this is expected to do well post elections and all. ITC, if you see, this is a weekly chart. It has now clearly trading above the 50 EMA. So next test is the 20 EMA, which it should be able to take out. I think it has bottomed out around 400 bucks. So after this, it should go. The volumes are good now. So it's one of the stock which is giving momentum to the strength to the Nifty. This is like I was mentioning about infrastructure. So if you see, I'll show you all the infra related stocks were doing well. One of them was Larsen, right? It went to a new high, roughly around 3,800, and this is the one which is in clear momentum. And the good part is that if the movement is not very quick, then it will not get overbought. Hence, if you are here, stay invested and use every dip closer to the 20 EMA, or it then goes below 20 EMA mostly, to accumulate this stock. The stock which was leading last week was Bajaj Finance. This is basically, and if you see here, if it trades above these 20 EMA of 6987, it can easily head back to that 8,000 level from where it had reverted back last time. It is in bullish momentum, and it has made a higher low. So if you see here, it has made a higher low, and it has not gone below the 200 EMA. So it has made a higher low, and now it is going up with momentum. And the reason is basically there is an IPO of Bajaj Housing Finance, which is being valued at around $8 or $9 billion, and that is the reason. And if you see here, the volumes were also decent, and it is likely to do well again now. But only thing has to be watched is this level of around 6,987,000, 7,000. So if it remains trades above this, then it can go higher. Nifty Bank, this is a weekly chart. So if you see here, it is primed for higher levels, and since now it is above the 20 EMA, it is expected to go up, test its earlier high of 48,500 odd, and it will continue to do well as this rate cutting cycle continues. So this should be the one which should be kept in mind for traders throughout the next week also. The daily chart. So if you see here, now it is clearly above the 20 EMA. It went up, but it corrected. But it will, if it is trading above the 20 EMA, it should do well from here. So Nifty Bank is one which should lead the index or Nifty now. And if you see here, this is HDFC Bank. So if you see the weekly chart, it has it is now roughly consolidating, but it has bottomed out roughly at around 1360 in the month of February, and now I think it's in wait and watch right now based on the results, with this quarter results and the management guidance. The movement will take place as per that. So the next level of resistance would be somewhere around 1500 odd levels, up to that, but it has to trade decisively above this 200 EMA. Right now it is some just slightly above that, so this has to be watched. The stock which is in momentum is ICICI Bank. It is trading above the rising trend line, and it is in momentum with RSI above 70, and it made a green candle last week, and this is the one which is powering the Nifty and Bank Nifty. The stock which gave a decent opportunity to enter last week, where it became some kind of a oversold, was IDFC First, because of a stake sale by one of the private equities in this. So it made a low of around 75. So just watch out for this. There is a value emerging here. The point here with IDFC First is that its book value is around 40 rupees right now. So it can easily trade up to 80 level. But beyond that, it requires some kind of a momentum or some good news or something like that. Right now, which is not coming. So at these levels, it is easy to buy this. But up to this 80, 82 levels, then it becomes starts becoming expensive. But this is a time to accumulate this stock. Truthfully, this stock is rising because of the reputation and effectiveness of its CEO, Mr. Vaidyanathan. Otherwise, it's like any other normal bank. They are in an expansion mode. They're opening a lot of branches, so there's a lot of capex going on and other issues. So it has to substantially improve its ROA, etc., to go up to higher valuations. That is in terms of price to book to valuations of HDFC Bank and ICICI Bank, etc. PSU Nifty PSU Bank Index. So if you see here, it had fallen 2 weeks back, corrected from its all-time high. It has recovered a bit, but it has not yet recovered fully. So, though the fall has stopped, so the trend is now changing, but it has to break above these earlier highs level for a positive trend to restart again. One of the important constituents of Nifty PSU Bank is SBI. This is a weekly chart. It has not dipped below the rising trend line. Hence, it has taken support there. So watch for these levels of around 730, 740, because this has provided support. Even once it had fallen from here, it had fallen to these levels only, and then it has tried to rise from these over the last 2 weeks. So here it is providing support to the SBI. The one of the stocks which is doing well is Canara Bank. This is a daily chart. It has given a breakout from a symmetrical triangle chart pattern, and it's expected to go above and test its all-time high of 600, 610 odd over the next few days. So this is a stock which is also getting powered because of the news on some kind of a stake sale in Canara Robeco Bank, Canara Robeco Mutual Fund also. So just keep this in horizon. Nifty PSE, this is a Nifty PSE index weekly chart, same as PSU Bank. It fell from its all-time high, and it has taken back some of the lost ground, but it has not yet fully recovered. But it has had a positive week, a green week after the fall. So it is expected to uh, go back above, and then only it will be strong. So just keep this in horizon. The stock in this sector, which is likely to do well based on positive news flow, is BHEL. BHEL had fallen to around 200 or 7 levels, but it has, after the positive news, it has recovered and has gone to around 250 levels. So they are getting a lot of projects. So keep this stock in horizon. They should do well along with the power and energy story in India. Another similar stock which is based on this power story is Power Grid. Here again, if you see here, it has recovered and has now made two green candles. So it has recovered from the lows it made around 260 odd. So it has come to around 270 odd level. So it should bounce back from here because this is a sector which is likely to grow from here. So if you see here, over the last year or so, it has always traded above its 20 EMA and it's always taken support here. So anything closer to 20 EMA should be a decent level to get into this stock. Nifty IT index had a negative week and looks weak. It is on the weekly chart, it has fallen below the 20 EMA after the fall last week. So it depends on the large caps in this sector, that is TCS and Infosys, for further movement on this. Uh, if it can recover from here, then it should bounce back above the 20 EMA. TCS, it was looking strong and made a rounding bottom, but then the stake sale has broken the momentum on this stock by Tata Sons in this stock. So it has fallen to its 20 EMA of around 3880. Now watch for this level. It made a doji here last week, So so that means it's undecided. Now I think they will wait for the results and the management guidance for the moment from here, whether it goes higher from here or then goes to lower levels to test the 50 or 100 EMA. So be careful with this stock. Infosys, it had corrected, and it had corrected to this rising trend line uh, where it has taken support, and it has given a green candle last week. So watch for these levels of closer to 1483 or which is its 100 EMA also, because it seems to be taking support here. So if it takes support here, then it can go up, back up. Resistances would be in the in the range of 1515 and 1570 once it goes up from here. So, but it has a tendency to correct post its results or before its results, and then based on the guidance and other issues, then the further movement in the stock takes place. Auto index as compared to PSU and PSE index, it has made fresh all-time high, and it has recovered all the losses and is now looking strong. This is basically because of Maruti, which has made a new all-time high and didn't dip much during the correction in March. And it had a strong week now, and it's closer to its all-time high because of better expectations of better sales from Maruti, and it's taking market share from its peers. The other stock which is looking strong is Eicher Motors. It has broken out from the declining trend line, and if it trades above this declining trend line levels, then it is expected to test its all-time high of around 4,200 from here. So just watch this stock. The RSI is decent and the volumes were good. The other sector which is looking weak or is yet to fully recover is energy sector. It had gone up, then it had corrected, but it has only recovered half of its losses. So similar to PSU and PSE index, because these were the sectors in momentum, but this should do well over the next 3 4 years. Uh, One of the stocks among this sector is Tata Power. So if you see the weekly chart, it is trading clearly above the 20 EMA, and it has made higher lows. So we'll have to see now where it goes from here. It is trying to recover back. It has come back to around 400 levels. So this should be a level to watch out for. It may break out from here. Nifty Infra is the another sector along with auto sector which is looking good. It has gone above its all-time high, and uh, it is now looking strong. And all the constituents of this sector, including L&T, ABB, Siemens, etc., are looking good. Uh, ABB was one of the stocks I had covered earlier. There's a daily chart. It had a breakout from a flag and pole pattern. So the length of the breakout is generally the length of the pole. So if you take the length of the pole from the lows here of around 5,400, it can easily go, and this length of pole is around 1,400 points. So it can easily go to 6,800 to 7,000 level. So watch for this. Don't try to sell it off too early. This has some way to go. This is going up because of a positive brokerage upgrade. Midcap index continued to uh, remain weak, though it recovered a bit, but it has not yet broken above the all-time high it had made, and it had made 5 weeks of lower lows. So, but it tested and has taken support at 20 EMA. So, watch for this level. Similar to Similarly is with Nifty Small Cap Index also. It has recovered and it took support at 20 EMA. So if it can recoup these things, then it will go into fresh high. But it is consolidating now, so just watch for these stocks. BSC was one of the strong stocks last week. It recovered from its low it made to around 1950 and has gone back up. So every dip up to its moving averages is a buying opportunity. Uh, so this is a stock to be accumulated on all dips and is showing momentum with the higher volumes. Now I'll cover a few stocks today. Uh, First one is High Tech Pipes. Uh, it's a manufacturer of electric resistance welded steel tubes and pipes, square hollow sections, rectangular hollow sections, solar top tubes, GI and GP pipes, cold rolled coils and strips, galvanized plain and corrugated sheets, color coated coils, and metal beam crash barriers. On a consolidated basis, it has a total installed capacity of 7.5 lakh tons per annum across six facilities and a sales and distribution management system with 450 plus distributors and retailers, enabling a pan-India presence. Company is currently incurring a capex to increase its capacity to 1 million tons per annum by FY25 and raise the proportion of its value-added products in the mix up to 50% by FY26. Short-term stability in HRC prices would aid in margin stability, while long-term volume expansion, product mix enrichment such as solar top tubes, color-coated roofing sheets, and operating leverage coming in with improved capacity utilization would support better margins. The company's new plant in Sanand, uh, Gujarat, is expected to cater to demand for top tubes arising out of ongoing upcoming solar power projects in Rajasthan, Gujarat, and from export market. So if you see its profit and loss account, the net revenue is expected to be reaching around 2,700 crores in this financial year and 3,470 crore in FY25 and 4,400 odd crores in FY26 with EBITDA, which is from 123 crore, is expected to nearly double to 265 crore in 2 years from FY24 to FY26, and similar improvement in profit before tax and PAT, which is expected to become nearly 3x over the next 2 years because of better margins and lower interest expenses. So the EPS is expected to become three times over the next 2 years from three, which is three plus, which is expected to be this year, to around 9.5 in FY26. And this is because, along with uh, the better balance sheet, they're likely to de-leverage, reduce their debt. So it will reduce their interest expenses by half, hence, which will improve their margins. Rest, their balance sheet is strong and is expected to grow over the next 2 to 3 years. This is their growth indicator. So if you see here, the revenue is expected to grow around 30% over the next 2 years. EBITDA around 50% and 38%. PAT is going to double. EPS is also expected to double. PE, so if you are counting a EPS of around 9 FY26, so the PE is going to be at the current price is going to be around 14, 15 only. So all the other parameters, valuation parameters are becoming better. Financial ratios are improving, ROE, ROC, asset turnover, etc. And margins are also improving. So this is a positive part. Now they have pan-India presence. They have head office in Delhi, uh, two plants in Secunderabad, UP. Then they're coming up with two plants in Sanand, Gujarat. There is a plant in Khopoli near Mumbai, and there is one plant in Hindupur in Andhra Pradesh. And they have regional offices, depots, etc., all over the country. So six plants, four depots, three offices, 450 plus dealers and distributors. So that is expected to drive their growth and their all India presence. So this is the schematic diagram of single axis solar tracker based panel assembly. So if you see here, solar panels are fixed on a module mounting structure, and this is fixed on top tubes on which these module mounting structures are clamped so as to give them some kind of a rotation. They are put on a tracker gear assembly which helps the top tube rotate up to 50 degrees each side so as to get maximum usage of solar power and improve the efficiency. And they are mounted on a vertical post, which are steel columns on which the entire assembly rests. So now, what is going to happen is with this sun tracking system, it can provide 15 to 25% incremental power output. The solar tracking and racking solution providers outsource the steel fabrication, top tube manufacturing to empanel vendors, out of which uh, one of them would be high-tech pipes. Uh, 40 to 45 tons of steel is needed for 1 megawatt of solar power, and there is a demand for zero point 0.6 metric ton of top tubes. So, this new 1,70,000 tons per annum Sanand facility has three dedicated lines of production of top tubes, so which will improve their revenues and their utilization in these areas of Gujarat, etc., and Rajasthan, where such plants are coming up. Uh, so, key demand drivers for domestic steel pipes is infrastructure and housing, where there are so many new projects, smart cities, etc., which are on water supply, Nal Se Jal scheme, oil and gas, where there is a pipe city gas distribution which is being provided, defense, a lot of equipment will require these pipes, airports. Government is planning to add around 100 odd airports over next 1 or 2 years. Railway infrastructure, railway stations, freight corridors, bullet train projects, national rail corridor, agriculture, micro irrigation, and polyhouse, future of farming, high subsidy, solar, as I've covered, future of power generation, and exponential growth. This is their how they are planning to increase the capacity across their facilities. So if you see here, they are expecting they are over FY25, they are creating at Secunderabad and Sanand roughly 4 lakh tons per annum capacity, and at Hindupur approximately 80,000 tons and 1,20,000 tons at Khopoli. So this should give them additional market share uh, over this over these pipes. Now, if you see their chart, now if you see here, it went up to 106.70 odd in February on large volumes, and then it corrected from there because I think this was not adequately discovered stock, and it corrected, came to its 200-day EMA to around 110 or below, and then has recovered roughly 50% from there. So keep this stock in mind and accumulate this on all dips. Volume expansion and product mix improvement will drive growth. FY25 sales is expected to be around 500 to 550 kilotons, and domestic market is 7 to 10 metric tons per annum. So this is like a stock is like a shark in the ocean. So they have a lot of potential to grab market share and grow. Better product mix will take EBITDA per ton to around 4,000 to 4,500 rupees, which is presently at around 3,000 rupees. So that should help. And as we have brought out, the cash flows from new plants would help in deleveraging and reducing the debt levels and interest costs. So improved asset utilization will also improve the return ratios, which will come down, which have come down due to capex and volume expansion. Next stock is Adani Ports. The stock was in news because they did a acquisition of 95% stake in Gopalpur Port at an enterprise value of 3,080 crore. That is 13 times FY24 EV EBITDA and 10 times FY25 EV EBITDA. It's a bulk port located on the east coast of India with 20 million tons per annum handling capacity, 30-year concession extendable up to 2056, and over 500 acres of leased land parcel. Given SEZ's expertise in ramping up volumes and improving EBITDA margins, through cost, operational efficiencies, and debottlenecking. GPL will be a value accretive acquisition for the company. It will be 6 ports on the East Coast, which comprises of Dhamra, Gangavaram, Krishnapatnam, Kattupalli, and Ennore ports. Its location provides access to the mining hubs of Odisha and neighboring states. Port is an all-weather deep-water direct berthing port situated in Ganjam district of Odisha. Major commodities handled are coking coal, limestones, iron ore, thermal coal, steel, cement, etc. Though this acquisition is a small one, less than 3% of total consolidated volumes of Adani ports, but it's a good from sentiment point of view and shows that there is a big growth which is forthcoming for this company, and it is in line with the strategy of East Coast to West Coast parity of the company. We will see this. Their net sales are expected to grow around 15 to 16% over the next 2 years to around 31,000 crore to around 35,000 crore. So EBITDA margins are expected to remain stable at around 60%. So the EPS is for the next year is expected to be around 50, sorry, and was that around 58. So at 50 EPS, it can easily be given a P of around 30. So it should trade at around 1500. All the ROIC, ROE, etc. are supposed to improve, and PE is coming down, so the stock is becoming less expensive. As I had brought out, this was acquired at a EV EBITDA of around 16. So Adani Ports is trading at a EV EBITDA of 19. Hence, uh, good for the company and it will reduce the valuation. Uh, the growing share of non-mudra ports in volume you can see over the years, over the last 12, 13 years, from single port dominated Mundra port dominated business, it has now become roughly 50% each on each coast now for Mundra and non-Mundra. And if you see West Coast, East Coast, it is now 43% is the East Coast volumes and 57% is the West Coast volume. So that is improving, and as they're creating better capacities utilization in the East Coast ports. This is the Gopalpur port location. It's on the eastern coast in Odisha. It is located between the two ports of Vizag, Vishakhapatnam, and Paradip, and Gangavaram and Dhamra are located nearby. This area is the place from where there are a number of iron ore mines, steel plants, coal mines, alumina plants of Chhattisgarh, Jharkhand, West Bengal, Odisha, etc. There are decent infrastructure around the Gopalpur port with railway siding, national highways, etc. available, and a good port which can be further developed. So this infrastructure, since they've got the land leased to them, they will bring up the infrastructure close by. Now, they are the largest private port players having global presence. So if you see here, these are their ports on the west coast with a capacity of 355 million metric tons and east coast 252 million metric tons. This thing, so 14 ports with a capacity of 607 million metric tons, achieving some kind of a east-west coast parity. And they are operating international ports. Israel's Haifa port, handling 50% of that country's total cargo. O&M operation maintenance contract at ports of Australia and Tanzania, and building a container terminal at Colombo, Sri Lanka. So this is driving the future growth for this company. They have more of a logistics setup now, which will provide them growth impetus and help reaching customers' gate. So they have improved in terms of trains, uh, multimodal logistic parks, grain silos, warehousing, railway tracks, marine flotillas. So all FY26, the capacity would be roughly 1.7 to 2.3 times, and some at warehousing roughly 25x, for railway tracks 3x, etc. So this is a big logistic setup which is coming up. So if you see the chart, it had a dip in January last year, where it went to around 400 levels, and then it recovered post November, it had a rise from that 800 odd level where it was consolidating at to now roughly 1340 level based on this news. So this is a stock to be accumulated on all dips, like it had 2 weeks back, dipped to around below 1200 level. That was the opportunity to buy this. So if this is stock in horizon, and this is a stock for long term uh, to be held in stock. Uh, Last stock today is KPIT Tech. KPIT has corrected 20% over the last 1 month. Investors seem concerned on the impact of global EV slowdown on downstream services that it offers. Softwarization of vehicles, where KPIT's focus is a parallel shift to electrification, and hence investment cycle of two need not be coupled. E-powertrain related work, which is correlated with EV demand, constitute less than third of KPIT's revenue today. Even as OEMs scale back their EV volume projections, the new model launches are on track. Recent commentary by global OEMs point to sustained investment in software stack. KPIT is also relatively insulated from slowdown in software spend, unlike some of its peers, given higher share of OEM in its revenue mix. It will guide for 18 to 20% FY24, FY25 constant currency revenue growth, highest among its peers. So just watch out for their guidance at the end of or at for in their this con call now, which will be there with their results as to what they are going to guide for, and based on that, their future performance will be decided. So if you see their P&L, their sales grew roughly 40% in FY24, but it's going to slow down to around 15 to 18% now over the next 2 years. Margins are expected to remain high at 20% plus. Uh, so the EPS is expected to be around 26 to around 31, 32 over the next 1 or 2 years. So ROIC, ROE are expected to be good in 30% capacity, 30% levels. And the PE will come down to lower levels around 50 odd. So at 50 PE for FY25 and with EPS of 25, 26, this is now as this thing fully priced. Uh, with other parameters are also improving now. So if you see here, uh, 80 to 85% of KPIT's powertrain revenues come from e-powertrain, constituting less than third of total revenues. Revenue split by practices FY25. Others are 33 connected vehicles, ADAS, which is advanced driver assistance systems, and powertrains is just 37%. Now, e-powertrain is lightweight compact system that produces extremely low vibrations and generate instant torque for electric vehicles. And this is where the softwares are being provided. Uh, that is aimed for the next generation new energy vehicles. But presently, what they are working on is that decoupling of software from the vehicle hardware. So, all this new kind of software which are being added is going to improve the driving comfort. So, like GM has added Super Cruise to its internal combustion engine vehicle Traverse. Hence, better softwares are coming up in all new launches. So if you see here, Nissan is launching 30 new models. Volkswagen to launch 30 new cars. Ford may return to Indian market with EVs. Renault future lineup to include 7 EVs developed and built by Ampere. So the point is their revenues do not depend on quantum of vehicles sold. Their revenues depend on number of new launches, as they can produce better software for uh, these companies, these OEMs. See their DuPont analysis, margins are expected to improve, asset turnover is better, and ROE is expected to improve. Similarly, for all related to all the key ratios, they are expected to be better now, where ROE is improving and book value is also improving, and PE is going down now from here. So this is finally the moment of this talk will depend on what guidance they give. Now, interestingly, for KPIT, the stock had tipped, but it went to the similar level where to around 1320, 1325 levels where it had gone earlier, and then it had bounced from there. So it didn't make lower low, so which shows strength. Now the stock has recovered and has gone to test the 20 and 50 EMA. So if it goes above that, it may go and test the previous highs. Otherwise, it will test that lower level. So this is a stock to be accumulated on all dips based on their result and their guidance, which is going to come now at the end of this quarter. So I have finished. Uh, we'll take questions now.